What's up, guys? Welcome to Money So Tasty. Let's all get a taste of capital. In our last episode, we talked a little bit about what is a fund. For example, what is a mutual fund? Now, some fellow has been saying, I don't want to put my money at the bank because it seems it's not earning anything and it's even earning less than inflation. So in essence, I'm losing money. But at the same time, I don't want to play in the stock market. It's just too much for me to handle. So I heard this thing called GIC, Guaranteed Investment Certificate. Is this something good for me right now? So in this episode, we'll talk about what's up with GIC. At the same time, some other fellows have been saying, is GIC really making me money or is GIC losing me money? And I heard GIC is taxable. So how is GIC taxed? At the end of this video, we'll also share with you why so many entrepreneurs, business owners, institutional investors like GIC for certain other reasons or benefits that you probably don't understand. The so-called GIC advanced stuff. If this is your first time to our channel, this channel is all about sharing on your journey to financial freedom. What are the investing or money-making mindset you need to have? What are the so common pitfalls you want to avoid? If you want to become financially free naturally with us, then make sure you subscribe to this channel, give this video a thumbs up, and open your little bell notification so you will never miss another pie in the sky. So first of all, what is a GIC? GIC stands for Guaranteed Investment Certificate. It's something a lot of people probably have purchased in the past. It's basically you putting your money at the bank, sort of like a term deposit. And the bank will pay you some interest, let's say 1.5% or 2%. Now, GIC can be categorized into cashable or redeemable. It means you can take your money out at any time. Or non-cashable, non-redeemable. It means you cannot take your money out before the term expires, before the maturity date. The common duration for GIC is anywhere from 6 months to 10 years. I know the most common ones are probably 2 years, 3 years, 4 years, 5 years, but you can really buy as long as a 10-year GIC. Okay, now let's talk about taxes. Someone really important once said, death and taxes are the two things that you really can't avoid. So investing without talking about taxes is really futile. So first question, is GIC taxable? What do you think? Okay, I probably already gave out the clue. GIC is totally taxable, just as your money in your checking or savings account is totally taxable. Now, you might not receive an interest slip from the bank if you don't accumulate too much interest, let's say over $50 or over $100 in a year. But all the interest earned in your savings or checking account, as well as GIC, is totally taxable. Now, the next question is, how much am I taxed? So to give you a few choices, do you think GIC is taxed at 10%, 20%, 30%, 40%, or 50%? Think about it. Which do you think is the right answer? Now, the answer is it really depends. It depends on something called marginal tax rate, MTR. Just to show you an example, this is the personal income marginal tax rate for 2020. Take a look at this category. A lot of friends, clients are in this category. It's one of the larger categories as well, 95,000 to roughly about 150,000. If your income is in this range, then your marginal tax rate is 43.17%. Now, marginal tax rate is a little different from average tax rate. Average tax rate is on average how much you pay. For example, you make 100,000 and you pay 30,000 in tax, so your average tax rate is 30%. Marginal tax rate is the last bracket, the highest bracket. So if you earn $1 more now, you would pay 43.17 cents of taxes. Keep things simple, which is say 40% is your marginal tax rate. And now let's talk about how much is GIC making for you. So currently on the market, it doesn't matter if you're buying 1 year or 5 year at any of the big 5 banks, you're probably getting anything less than 2%. That's right, getting anything less than 2%. So now let's calculate your after-tax yield. Your after-tax yield would be 2% times, but then you have to pay 40% of that to tax. You're left with 60%. So 2% times 60% is 1.2%. Now comes the next question, which is this making me money or losing me money? Or is this a good thing or relatively good investment or relatively a bad investment? Well, it all depends on who you're comparing this with or what you're comparing this with. So for example, if you're comparing this with inflation, which in the long term is probably around 1.5% to 2%, then in essence, you're losing money every year. You're losing your purchasing power. So it's maybe more correctly, it's called guaranteed loss certificate. If you're comparing, for example, with putting cash under your mattress or simply in a non-interest generating checking or savings account, then you're making some money. And if you're comparing with the stock market in the short term, where it could lose, for example, earlier this year, 10%, 20%, 30%, then relatively speaking, you're making a lot of money. So it all depends what you're comparing this with. So now we can talk about, if this is making so little return, then why so many entrepreneurs, business owners, and institutional owners use this vehicle? It must be for some other reasons. So there are a number of reasons why they do this. Let's just share two common ones. One is something called creditor protection. So if your GIC is structured correctly, certain types of GIC can offer you creditor protection, which means if you or your business owe other people's money, they could go after your assets. If your GIC is structured correctly, it could prevent your creditors from claiming your assets. Now, more details we'll talk about maybe in our future episodes. The second major benefit is something called bypass estate probate, which means if a person passes away, all of the asset could be going to court. And this is a very long process, probate, and generates a lot of fees, lawyers, accountants, different types of fees. And it could take months and sometimes even over a year for your beneficiary to receive the money. So if your GIC is structured correctly, it can help you avoid all that process by bypassing the probate phase. And your beneficiary can get the money without any additional cost in 1 to 3 weeks. So those two are some of the common benefits why business owners, entrepreneurs, and corporations and institutional investors use GIC for those kind of strategies. So it's not really a money-making strategy, but the benefits behind far outweigh everything else. Now, recently, while we're discussing the market, the current sentiments, investment in general, a friend told me why he invests in GIC. He calls it, there's this premium for comfort. What does that mean? So if he invests in the stock market, he's a business owner as well, by the way. So he has a lot to worry on his plate already. So if he invests in the stock market, he needs to put time into it, research, look at the news, follow the market, sort of follow that volatility. And he says if he does that and he sees that the value fluctuates day to day, that might affect how he feels and that might affect his sleep. So he calls this investing in GIC can give him this premium called comfort premium. He doesn't have to worry about certain things. So if you factor that into your whole investment, your whole asset management, that can kind of make sense too, right? You want to make sure you save all your energy, your focus. You want to make sure you have a peace of mind because your business is a very risky asset, right? In terms of stock, we talk about it. Small business, you can think of it as a super, super risky stock. So you want something else to balance it. Maybe it's a very diversified multi-asset portfolio. Maybe it's GIC, maybe it's insurance, maybe it's a pension fund. You want something on the safer side to balance it out. So there you go. That's another reason why so many business owners like GIC. At the same time, GIC, especially redeemable GIC, provides them with a little bit of income, a little bit of interest, but more importantly, liquidity, so they can take advantage of any opportunity that comes up. Okay, that's it for today, guys. If you have any questions, comments, views, interesting or funny stories relating to GIC or just investments in general, we'd love to see your comments below. On our journey to financial freedom, we need to form some good habits. So why don't we start with the following 3 little habits? If you haven't done so, make sure you subscribe to our channel, make sure you give a thumbs up, and share with your friends and families who you have discussed similar topics with. Money so tasty, retire so early. Until next time, remember, you are freer than you think.